Elon Musk is reportedly eyeing a team to develop his own rival to ChatGPT. The information first to report that Musk is putting together this team to impart pushback on what Musk feels is, quote, woke AI.
It's taken you so long to ramp up that Tesla's head start is so great that you're behind GM and Ford as well, that it's going to be tough for you guys to catch up.
We love competition. We are racers at Stellantis. We love competition. The fact that we know what our competitors are doing to a certain extent can be for us not only a motivation but also an information, intelligence. Now we know what we need to do better.
In this video, the world's largest and fifth largest automotive manufacturers both catastrophically embarrass themselves, admitting Tesla is so far ahead of them it is ridiculous. BS, they're not going to make it. Rivian raises a bunch of red flags and disappoints Wall Street. News of a Mexican Tesla factory leak ahead of Investor Day 2023. And Elon Musk appears to be in the early stages of recruiting AI talent for something really big. While we're on the topic of really big things, I promise I won't make any jokes about your girlfriend. I think big would be a great way to describe the current size of the archive of exclusive videos over on Patreon, which has now surpassed 300. If you're not a member, you're missing out on quite a library of content. You can join Patreon with the card in the corner or the link in the pinned comment. We're over on Tasmanian. Quote, Tesla Model Y under the skin is a true work of art, says Toyota. Wait, hold up a minute. What's the date on this article? February 28th, 2023. When did the Model Y come out? Why is it only now that Toyota has looked under the skin of a Model Y? I can't even these fucking idiots. Toyota, who, if you haven't heard, recently shit-canned their incompetent CEO, grandson of the original company founder. Toyota recently tore down the Tesla Model Y. Okay, one more time. Toyota, the world's largest automotive manufacturer, only just tore down the Tesla Model Y to learn how to build its own electric car that would be competitive. The level of ignorance, stupidity, arrogance, blindness, hubris, and plain old brain damage at Toyota. How the fuck has it taken until early 2023 for the world's largest automotive manufacturer to even look and tear down a Tesla Model Y? What planet are these morons on? Oh, I know the planet. It's called We're Desperate to Go Bankrupt. Population, the entire legacy automotive industry. I suspect this has happened at the same time that Toyota, as in Toyota, not Toyota, same time Toyota has been canned. Finally, somebody with a brain is running the company, goes, all right, let's find out what we need to do to try to catch up to Tesla. I just can't believe this. I mean, if you're a Patreon member, you'll have seen me absolutely destroy Toyota's ex-management, CEO, idiocy, the dumb leadership constantly. How are they this blind? How are they this dumb? How do they not get it? You cannot make this up. I just cannot. It's 2023. What have they been doing? One of the leaders of the company said that under the skin, Model Y is a real work of art. In totally unrelated matters, does anyone recall any supposed Wall Street analysts who say things that are super dumb, ever saying something along the lines of, Tesla doesn't have anything that Toyota doesn't already have? Craig, you dumb motherfucker. Really, Craig? Really? Then why would Toyota be describing what's under the skin of a Model Y as a real work of art? And why would they be admiring things that they've seen after tearing down this Model Y, Craig? Good question. Toyota is seriously looking into Tesla as it plans to push the next generation EV platform. The company's engineers recently tore down the Tesla Model Y, not only covering key technological secrets of the popular American-made all-electric crossover, but also finding plenty to admire, according to Automotive News. Under the body of the compact SUV, Toyota found an artfully simplified vehicle. I just can't. What the f***, dude? What have they been doing? What have they been doing? Toyota found an artfully simplified vehicle design built with cutting-edge manufacturing prowess that would be the envy of any legacy automaker. Quote, taking the skin off the Model Y, it was truly a true work of art, said one Toyota executive who scrutinized the Tesla part by part. Quote, it's unbelievable, almost as unbelievable as how long it's taken these fucking morons to even look under the hood of a Tesla. God damn it, dude. You guys notice I get a little bit triggered by incompetence? The Tesla teardown showed Toyota that its own advances... God damn it, I just can't get over this. It's 2023! The Tesla teardown showed Toyota something that we've known for years, that its own advances in manufacturing technology were surpassed in many ways. Although the latest versions of the Model Y look the same on the outside, they have been completely redesigned on the inside. Tesla, I can't believe it still. Tesla innovates in their vehicles as soon as they achieve certain improvements, so they are improving non-stop. The use of Tesla's giant casting eliminated a huge amount of parts and brackets. Now the company casts the front and rear ends of the car and inserts a structural battery pack between them, which has a huge number of advantages. Tesla's approach has eliminated hundreds of parts and reduced weight by 220 pounds while increasing the car's battery range and reducing its overall manufacturing costs, according to Toyota's estimate provided to Automotive News. Quote, "It's a whole different manufacturing philosophy," one executive said. I mean, no shit, Sherlock. Quote, "We need a new platform designed as a blank sheet EV," said another. They're finally waking the up, only about 15 years too late. California illustrates the challenge facing Toyota. The automaker has long dominated the state's green car market. For years, its Camry sedan was the state's best-selling passenger car, but last year, Tesla Model 3 took the sales crown. Tesla Model Y has also supplanted Toyota's RAV4 as the state's best-selling crossover. Tesla is on track to oust Toyota as the top-selling brand in the state in just 1 or 2 years, analysts say.
One of the original founders of OpenAI, Elon Musk, is reportedly eyeing a team to develop his own rival to ChatGPT. The information first to report that Musk is putting together this team to impart pushback on what Musk feels is, quote, woke AI. Senior autos reporter Praz Romanian here with more on that story. Praz, can't help but wonder, as always, how a Tesla investor must eye this latest news. Can it help the Tesla story, or is it yet another Twitter-like distraction?
You know, I think surprisingly, this is actually sort of in the same lane as what Tesla's up to, right? Because, you know, I was a little surprised to see the story that he's going after a ChatGPT rival because, you know, Musk, you said co-founded OpenAI, but, you know, obviously has different goals in mind. But with regards to Tesla, they use a lot of AI for a lot of their services, software services. Most importantly, self-driving, which is on its spotlight recently. They use a neural network, a lot of supercomputing there, the Dojo supercomputer and the AI programming to sort of use AI in a sense to power the self-driving suite of offerings they have. So I'm not surprised by that. And we're probably going to hear more about that tomorrow during Tesla's Investor Day. Musk has promised to show kind of how he's going to connect all the dots with Tesla, AI, the Dojo supercomputer, and even SpaceX. So we'll see all that tomorrow. So I'm not surprised that he's pursuing a rival to ChatGPT right now.
Nor am I. Here's a tweet I posted on February 16th. When is OpenAI going to rename to Closed AI? Elon Musk responding, leaving a gigantic breadcrumb. Good question. A day later, this. What we need is Truth GPT. As opposed to woke, extremely left-leaning, politically biased, I won't actually answer the question if somebody's programming not to answer, because apparently the truth might be offensive. GPT, curiously, some guy with 3 first names, quoted this and said, "Watch this space." I wonder why that guy would write "watch this space." Oh, I know why he wrote that, so that when this leaked, that Elon was working on a new AI company, he could go, "Hey, look, I saw this coming." So anyway, we need to talk about this. 1, it's going to happen. 2, people are going to get pissed. And 3, there's 2 ways this can happen. 2 very important ways this may play out. One of which has a massive impact on Tesla investors. Actually, both of them will have a massive impact on Tesla investors. Let me quote this tweet I posted this morning. "I can't wait to see how pissed the crybabies are who also own Tesla when Elon Musk announces he has founded Based AI." In 2022, people lost their minds. "What the bro? What are you talking about, free speech and censorship? There's nothing. Why are you playing Twitter, bro? Nothing's wrong. Elon, stop being an idiot, bro." A lot of people just didn't understand Elon's motivations, and they're all dangerous. In 2023, same shit. People are going to be losing their minds. "What are you talking about, man? AGI, there's no problem here. Can't possibly go wrong, Elon. Why are you doing this to us, Elon? Stop being distracted." Now we need to talk about what happened to OpenAI and how we can avoid seeing an exact replay of this with Based AI, as I'm currently calling it. You see, OpenAI was founded on the principles of being open source and fully transparent. Here's our code. Look, let's show everybody the latest progress in AI. Transparency. Here's what we're doing. And it was not to be for profit. It is now currently closed source, not open source. I mean, it's literally now the opposite of what was intended, and it's now for profit. And Microsoft owns a huge chunk. OpenAI has become the very thing it was intended to prevent happening. Disaster. I've been losing sleep about this, especially with the recent progress in language-based AI models. I'm deeply disturbed by the biases. ChatGPT is woke as fuck because it was programmed by woke as humans. It's incredible. This is a major problem. We can't even see the source code, and it's for profit. Now, how does Elon solve this with Based AI? 2 options. He funds it from his own pocket. Guess how he does that? Tesla shareholders are going to get fucking mad. But I have a better approach, a smarter approach, and I think this is the approach that Elon will pursue. It's under Tesla. Based AI will be a Tesla project. Why? Because Tesla needs AI to develop their autonomous software, to develop their humanoid robot. If you don't know, Recent breakthroughs in language-based AI models, the very thing that OpenAI's ChatGPT is doing, the very thing, have been implemented, integrated to help Tesla's full self-driving software get better, more capable, seriously. So, improvements in language-based AI models can actually directly help Tesla with FSD, and more importantly, the humanoid robot will have Tesla on the path to developing AGI. Elon and Tesla can justify this AI startup within Tesla. It's in line with their mission. Based AI won't need to seek out multi-decade billion-dollar external investments from companies like Microsoft. Some investors will get real fucking mad, but I'm flagging this now. I believe that Elon's first and highest priority is to A, make this happen, and B, to do so in a way where it will never need external funding. Therefore, do it under Tesla. Will this be possible? Hopefully, but you never know. Importantly, if this does fall under Tesla, Tesla the company can be funding this project, not seeking external investment. This won't be the first time Tesla's done something that may be viewed potentially as an act of philanthropy. In 2014, they gave away all their patents and said, hey guys, here's all of our shit. Go make EVs. We won't sue you, as long as they're used in good faith. Investors, many of them lost their minds back in 2014, but I saw this as a big swinging dick moment. They're so confident in the evolution and development and progress of their technology, they're giving away their 2014 shit, but they can keep out innovating and move faster than everyone else. So far, that's worked out fine. Tesla has recently, in fact today, opened some of their US superchargers to non-Tesla EVs. Again, does this align with Tesla's mission directly? Should shareholders be pissed? It does align with Tesla's mission, but there's a conflict with some shareholders. A lot of people are going to be concerned that it's going to make the experience of Tesla owners worse, yet Tesla did it. This may be a third such example of Tesla doing something that needs to happen. It's more important than short-term profitability. That is mission aligned. After all, if there's no more humans to buy EVs, then Tesla's probably failed at their mission. So just flagging this now. Let's see what happens.
Tomorrow, Tesla has their big investor day event in Texas. What are your sort of high-level thoughts on what we can expect to see, and what are you sort of bullish on there?
Yeah, we put a note out this morning on this. We think there's both near-term issues and long-term issues there. Near term, it's going to be the rebound in demand following the price cuts. Has demand remained strong? In the weeks since they cut pricing in January.
The f*** is he talking about? They've already raised prices in multiple regions since reducing prices. Is this guy serious? I just don't understand Wall Street sometimes. I don't think the typical Wall Street stock analyst is going to realize this until at least 2030. But Tesla will sell every single vehicle they produce between now and 2030, when they reach approximately 20 million vehicles produced per year, and do so profitably. The average price of a Tesla vehicle sold will trend down over time. As their costs come down, they'll pass those cost savings on to consumers and sell every vehicle they make. The fact that anyone is questioning this today stuns me. And the fact that Garrett here is so daft or uninformed that he doesn't even know Tesla's already increased prices in multiple regions after the recent price decreases, as in, the price went too low, too many people ordered them, need to go up again. I'm lost for words, dude.
As far as any new products, more specific details as far as first production and deliveries of the Cybertruck, how quickly can they ramp up volumes? We know the backlog of that model is the highest of any forthcoming EV by a wide margin. The reservation count is rumored to be north of 1.7 million units. So, and then longer term, it's how are they going to execute as far as this very ambitious production growth goal to go from the 500,000 units that they sold in 2020 to 20 million units by 2030. That's 40 times growth. It would make them the largest auto manufacturer in the world by a wide margin. But to do that, I know there's been a lot of chatter regarding them potentially unveiling a mass market EV, a compact vehicle, sort of a coupe or hatchback type lower priced vehicle. So I think there's some anticipation that might happen. What we do know is that in the past, leading up to these investor events that Tesla has had, the stock price has typically risen, and then afterwards there's been sort of a sell the news reaction typically. So and sure enough, right. That's what we've seen with Tesla up almost 70% year to date heading into today.
So Garrett does make a fair point in terms of selling the news around Tesla events. More often than not, in fact in almost every case, but not every single case, Tesla holds an event like this, full of incredible news, especially for long-term investors, and then the stock sells off down 3, 5, 7, 8, 12% the following day. Not a prediction, but I am just pointing out that in the past, historically, more often than not, this does tend to happen. And now some news from the next Tesla. I'm just kidding, there is no next Tesla, but here's some news from Rivian, who haven't gone bankrupt yet.
Let's talk about one of Tesla's competitors out there in the EV space, Rivian, certainly a name to focus on here this afternoon. You're looking at the stock up ahead of this report, nearly 5% today, at least. Let's caveat that with today. What can we expect there?
Spoiler alert. That was before Rivian posted their earnings.
Morgan, take a look at shares of Rivian down more than 7% after the company reported a smaller than expected loss for the fourth quarter of $1.73. The street was expecting a loss of $1.94. However, revenue did come in also lighter than expected. $663 million was the revenue for the fourth quarter. The street expecting $742 million. But one reason why this stock is trending lower, it is the guidance for next year. And production is what people are focused on. Many people were expecting them to say the production next year will be at least 60,000 vehicles. Rivian says it expects to build 50,000 vehicles. So 10,000 fewer than many analysts were expecting.
Production is, what's that word? Production is, hard. Now, in fairness, Wall Street was guessing how many deliveries Rivian would be promising for the full year. So Wall Street missed. Rivian didn't reduce or decrease their guidance. They gave guidance, which was less than Wall Street was hoping for. P.S. Hope is not strategy. But to put that in context, 50,000 vehicles for 2023. We heard yesterday that Giga Berlin produced 4,000 vehicles in a single week. The factory is still currently ramping up, very early on in its ramp, which has had a lot of obstacles along the way. Tesla's Berlin factory is already at an annualized rate of over 200,000 vehicles per year. Just one factory, currently still early in its ramp. And Rivian, for the entire year, is hoping for a quarter of the current annualized rate of a new Tesla factory that's currently ramping up. A very important context. Rivian is still at the base of the mountain.
Phil, got a question for you on this. Given what we just heard from Lucid, right, and
Yep.
demand issues, it looks like out of there, they're able to make enough cars, but they can't move them.
Yep.
And then even some inventory issues that Tesla's been having. How should we read the impact on the entire space and then on these challenger players right now?
The pure EV startups, and by that I mean the three, Lucid, Rivian, and Fisker, all reported completely different approaches here. You heard the numbers yesterday from Fisker saying that they expect that they're going to see sales and the production ramp as expected this year. And now you have Rivian saying 50,000 vehicles will be produced, lighter than expectations from the street. As for Lucid, we've talked about the issues that are there. We heard from them last week, and the stock moved down lower after they gave guidance that was lackluster at best. So what you're looking at here, John, is a real divergence amongst these startups based on what their business model is. Remember, Fisker's business model, asset light. They are not responsible. The manufacturing is done by Magna in Graz, Austria. And the markets that they're going into are completely different. For Rivian, the interesting thing will be on this conference call, what do they say about reservations? Do they give us an updated number? We know that the other automakers, or Lucid in particular, has said, look, we're not going to be giving you guidance in terms of reservations in the future. And increasingly, automakers are moving away from talking about reservations. I will be curious to see what R.J. Scaringe says about what reservation erosion has happened, especially given the EV market being under more pressure.
Check out shares of EV maker Rivian, down 7.5% after hours as investors digest the latest quarterly earnings report. Not too thrilled with them. What about Michael Schliske, D.A. Davidson Managing Director and Senior Equity Research Analyst? Good to see you, sir. What is your reaction to the numbers from Rivian just released?
Yes, hi, thanks for having me. I mean, in general, it seems like almost every number is a bit light across the board as far as the outlook for 2023. Some of that's actually a positive. So certainly the production outlook, the EBITDA outlook, were a little bit light. The CapEx outlook also a little bit light. That means that they'll actually be spending a little bit less money than people may have thought of. So that might be a positive. But in general, most of these numbers do seem a bit light versus what everyone was probably thinking.
Michael, in terms of the biggest challenges ahead for the company, certainly higher costs, one of them there. And in terms of how the management team navigates this, potentially turns that around, what do you think the timeline realistically looks like on this?
You know, I'm not so sure they need to turn things around. They kind of need to speed things up. They had mentioned in their release that they're working with suppliers, not just on getting more and more parts or more components, but also trying to get better pricing. So those kind of things, they're saying, look, our company is now making 50,000 units this year, not the 25,000 or 24,000 from the prior year. We should get better pricing here. And so certainly when they make those kind of asks, there's going to be some pushback. They'll hopefully get them to get some contracts with a bit better pricing here.
All right, so 50,000 is their goal for production in 2023. They say it's up 36%. in Q4. You see a price target of $23. That's down from $27. Why are you cutting their price target, and why the underperform?
Yeah, the underperform is really based upon the fact that, look, every EV company that I've covered has just faced a multitude of bad news throughout the first few quarters of production. No change here. This is exactly like everyone else has been experiencing, and it has been, like everybody else, tough for their stock price, and that's happening. That's happening here. In this case, they're putting out a production number that is not probably not enough of a growth rate in 2023 compared to the ending growth rate of 2022. They're already at 10,000 units in 2022. To go from 10,000 to 12,500 a quarter isn't a big leap. And so it sounds like that might be a bit of a piece of bad news, the kind of bad news that I think is going to make the stock go down. It's really as simple as the news flow has been skewing negative, and for now, I think it's going to probably stay that way.
Ooh, that's a bit rough. Now, I was unaware of this. I'm assuming it's true. Did he just say that Rivian's quarterly production in Q4 was about 10,000 vehicles for the quarter? If true, this is a very, very big red flag. If Rivian's only aiming for 50,000 vehicles delivered in 2023, for the full year, they were already at an annualized rate of production of 40,000 vehicles per year at the end of 2022. That means they're growing their production 20% year over year. That is a huge red flag. Why so slow? Assuming what he said is correct, yeah, things don't look good here. Watch this space. And now some thoughts from Tesla's so-called competition, this time legacy automotive.
The news that you're announcing a new EV investment, 3 plants in Indiana, battery, electric motor production, $155 million, raises the broader question about where are we in terms of you guys, Stellantis, being ready to start rolling out large numbers of EVs over the next couple of years?
Well, indeed, that's the news for today, is that we are in our transformation journey for the EV offensive. We start this year.
So let's take a moment here. It's 2023, and we're hearing from the world's 5th largest automotive manufacturer that this is the year that they start their EV offensive. They are more than a decade late to the party. How embarrassing would it be? The CEO of the world's 5th largest automotive manufacturer to be announcing in 2023, yeah, you know what? People want EVs after all, so we're going to try and make some now. Oh, well, let's go, yeah. Now, for those of you who don't know, Stellantis was the result of a merger between Fiat Chrysler and the PSA Group from France. The brands under the Stellantis umbrella include Alfa Romeo, Chrysler, Dodge, Fiat, Jeep, and in 2023, they're just now announcing that they've realized that they need to build EVs. Just in case you don't know, there's no magic button they can press now to start producing electric vehicles at scale profitably. It's going to take years, better part of half a decade, to maybe get there, if they're lucky.
In the US with the ProMaster EV proposal. And from there, we are going to ramp up very strong this year, 24-25. Indeed, we are bringing our electric driving models to Kokomo with a $155 million investment. That means more than $3 billion invested in Indiana over the last couple of years, since 2020. So a very significant investment in this electrification journey. And we are starting. We are currently selling 23 EV models around the world. By the end of 23, we'll be at 32 models. By the end of next year, we'll be at 47 EV models around the world.
Well, I'd just like to say, rest in peace, Stellantis. We just heard the CEO touting the number of individual electric vehicle models they will have in the future. The same brain-dead strategy of every other legacy automotive manufacturer. Who needs one category killer per category? No. That's not how you do it. P.S. Don't tell that to Tesla. Instead, we're going to have 6 trillion different models available because that's what consumers want. And that's how we avoid spreading ourselves thin. That's how we can drive the cost of our vehicles down the most. That's how we can simplify our manufacturing process, streamline our manufacturing process, produce more cars faster, save money with parts in common, scale our production, and do so highly profitably. I just don't even, dude. I just don't even. This is the difference between a plan, we're going to have so many different models available soon, we can't lose, to a strategy. Whenever you hear a company touting the number of different models of vehicle they'll have available, red flag. Unnecessary complexity will not end well.
And the offensive in the US starts now.
But you know the knock on you guys is that it's taken you so long to ramp up, that Tesla's head start is so great that you're behind GM and Ford as well, that it's going to be tough for you guys to catch up.
We love competition. We are racers at Stellantis. We love competition. The fact that we know what our competitors are doing to a certain extent can be for us not only a motivation but also an information, intelligence Now we know what we need to do better, and that's exactly what we are going to show to our US consumers.
What a f***ing spin doctor, bro. The question he was asked in essence was, you are years behind Tesla. Doesn't that mean you're kind of going to have a hard f***ing time catching up? And in response, the CEO of Stellantis says, oh, it's really excellent that we're half a decade behind Tesla. Because now we know what we need to do to catch up to them. If they weren't a decade ahead of us, we wouldn't know what to do. This is just stunning. Worth noting, because there is some truth in this. Many legacy automotive manufacturers are looking to Tesla now, finally, given that Tesla's actually eating their lunch in a big way, and realizing, A, they are f***ed, B, they should have been moving towards EVs more than 10 years ago. Literally, just trying to play-by-play copy Tesla. But here's the problem. These dim companies are today going to put in place plans that they think will allow them to eventually catch up to Tesla. Between now and when they think they'll have caught up to Tesla will have done a million different new things and be moving in new directions that these companies will have failed to plan for. What else do you expect the CEO of the world's 5th largest automotive manufacturer to say when an anchor on CNBC points out that they're so f***ing far behind, it's embarrassing?
Good point, Phil. We're probably going bankrupt because we sat on our f***ing hands for too long, and that's probably not good, so I wouldn't own our stock. But I'm not going to say that out loud because I don't want our stock price to crash. I don't want the board to get pissed off at me, but just between you and I, we're f***ed and we know it, but we're going to pretend that we're not f***ed, and it's actually a good thing that Tesla's so far ahead.
So let's quickly recap here. War is peace, freedom is slavery, and ignorance is strength. And also, Stellantis, the world's 5th largest automotive manufacturer, being more than half a decade behind Tesla is actually a good thing. Meanwhile, Toyota have woken from their 15-year slumber and finally had a look inside a f***ing Tesla and been blown away by what they've discovered. So just a quick slow clap for Toyota. Well done. I was going to say better late than never, but that's not actually true. They're too late now and they're f***ed, so it would have been better to not be late. It would have been better to be on time and not go bankrupt. Seems almost certain that at Investor Day 2023 we're going to learn about a new Tesla factory in Mexico, and that may not be the only one. And it appears that Elon Musk is currently recruiting talent for based AI. Now, just between you and I think Toyota and Stellantis are going to need all the help they can get. My number one suggestion, after they've removed their heads from their own asses, would be to head to athleticgreens.com/SMR, take me up on the offer of 1 year free supply of vitamin D3 and K2, and for every single employee at each company to begin feeling and performing their best by filling in nutritional gaps, one scoop once a day every morning, to ensure they're getting 75 high quality vitamins, minerals, and whole food source nutrients, prebiotics, probiotics, digestive enzymes, to boost energy, mood, recovery, promote gut health, assist digestion, and to reduce fatigue. Like I said, they're going to need every advantage they can possibly get. I think Toyota in particular, after neglecting the health of the company for the last decade, really need to step it up in this regard. And if anyone watching can relate, maybe you've been neglecting your system for a little too long, it's never too late to make things right. Actually, I'm just kidding. It's definitely too late in the case of Toyota and Stellantis. They're going bankrupt. It's already over. Sorry, folks, but that's true. But in your case, with your own personal health, energy, and overall well-being, it's definitely not too late. So what are you waiting for? Head to athleticgreens.com/SMR or use the link in the pinned comment. Get your free 1 year supply of vitamin D3 and K2. And remember, there's a 90-day money-back guarantee, so you've got nothing to lose and a lot to gain. And don't forget, there's over 300 exclusive videos awaiting you on Patreon. You can join with the card in the corner or the link in the pinned comment. And I'll see you over there. Love ya.